As we've discussed throughout this lesson, volume is a powerful tool for confirming price action and identifying potential divergences between the market's true strength and the current trend. The volume moving average, which we've already been including in our recent chart examples, is a simple yet effective way to quickly determine whether the current volume levels are relatively strong or weak compared to their recent historical levels. Volume moving averages work just like price moving averages, smoothing out the volume data over a specified period of time. By comparing the current volume bars to this moving average, we can instantly find out if the volume is above or below typical levels, providing valuable insights into what's happening beneath the surface of the market. At Morpheus, we typically use the 50-period volume moving average for stocks, as it does a good job of spotting major volume spikes while still smoothing out the noise. However, for the faster-paced cryptocurrency markets, we tend to prefer the 20-period volume moving average as it's more responsive to rapid changes in volume. Ultimately, whether you use the 20-period, 50-period, or any other period moving average, it's your personal preference. What's most important is to consistently stick with your chosen period so you can develop a feel for interpreting the indicator consistently. In this example of Apple, we can see that the 50-period volume moving average is plotted as a yellow line on the volume chart. When the volume bars are consistently above this line, it suggests that the current volume trend is relatively strong compared to its recent history. However, it's important to remember that we don't want to interpret volume by itself. As we learned earlier, we need to cross-reference the volume with the price action to gain a more complete understanding of market dynamics. For example, in a steady uptrend, we ideally want to see volume expanding and staying above its moving average, confirming the bullish sentiment and increasing the odds of the trend continuing. This aligns with the bullish volume pattern we discussed earlier, where higher volume accompanies the up days and lower volume comes on the down days or consolidations. On the first half of this chart, we see the stock is in a clear uptrend, with the price consistently making higher highs and higher lows. Notice how the volume bars consistently spike above the 50-period volume moving average on each breakout to a new high, confirming the strength of the bullish trend. Then, when the price enters into a sideways consolidation, also known as a correction by time, notice how volume came in below average levels most of the time. This is exactly the type of high probability volume pattern we want to see in the MTG strategy, as it indicates the bears are not heavily selling when the bulls take a rest from buying. On the other hand, if the volume is consistently below its moving average during an uptrend, it could be an early warning sign of a potential divergence between price and volume, suggesting that the bullish momentum may be fading. Remember, we don't want to see a situation where the price is making new highs, but the volume is declining. That bearish divergence is often a red flag that a potential correction or trend reversal may be on the horizon. Now let's look at the daily chart of Peloton, a NASDAQ-listed manufacturer of home fitness equipment that exploded higher during the COVID pandemic, but swiftly reversed into a long-term downtrend thereafter. On this chart, notice how the volume bars are consistently below the 50-period moving average during the decline. While this light volume does not necessarily suggest a potential trend reversal on its own, it does align with another key concept. Stocks, cryptocurrencies, and other assets need strong volume to make significant moves higher, but can often decline on their own weight, even with minimal volume. Therefore, to confirm a potential bottom and trend reversal, we'd want to see a significant increase in volume near the lows, indicating strong buying interest and potential exhaustion of the downtrend. This high-volume bullish divergence would provide a more reliable signal of a potential reversal rather than relying solely on light volume during the decline. By integrating the volume moving average with analyzing price-to-volume divergence, as we covered earlier, you can quickly assess the relative strength or weakness of the current volume trend and then cross-reference it with the price action to identify potential high-probability trade setups or early warning signs of a potential trend change. Now, let's put your skills at analyzing volume moving averages to the test with a practical example. Let's revisit the daily chart of Coinbase stock from our earlier exercise in this lesson, but a different time period. As you can see, we've already loaded the chart with the 50-period volume moving average, the yellow line on the bottom. Your task is to identify the current trend based on the price action. Then observe the relationship between the volume bars and the 50-period volume moving average. Are the volume bars coming in above or below the moving average most of the time? Next, Determine whether the volume is confirming the current trend or suggesting a potential divergence. Finally, consider how this information might influence your trading decisions if you were looking to enter or exit a position. Feel free to use any tools available on your TradingView platform to assist in your analysis, and you can even print out the chart and mark it up if that helps. When you're ready, pause the video, analyze the chart, then resume when you're ready to discuss the result. Okay, how did you do? In the first part of the chart, we see the price quietly drifting in a sideways range with volume coming in lighter than average. But then we see the price breaks out of its range to a new high, which was sparked by a positive reaction to earnings. Remember that earnings dates are annotated on TradingView with the letter E below the price chart. The stock then entered into a new uptrend, which was indeed confirmed by increasing volume as the price trended higher. Notice how the 50-day volume moving average also began gently sloping higher, indicating a pattern of increasing volume. The alignment between the bullish price action and the volume moving average is a positive sign as it indicates the uptrend is supported by strong buying pressure. This could potentially influence your decision to buy or hold a long position. Finally, after more than doubling less than 2 months later, we finally see the telltale signs of profit-taking in the form of 2 big down days on sharply higher volume. Now, if we were holding a position of coin, this would be a clear warning sign to tighten stops to prevent giving back profits and or exit partial position size to lock in gains. Great job on completing this exercise. As we move forward, keep practicing your volume analysis skills and integrating them into your overall trading strategy.